What's going on, y'all? Marquise here with MH Capital, and I'm excited because in this video, we're hitting the charts. We'll be going over my favorite types of high probability supply and demand zone trades, which is the type of strategy that I like to trade. So let's jump right into it. So we're going to start by going over some demand zone trades. And for those that don't know, a demand is simply when there's aggressive buying in an area or at a key level, and supply is the opposite, aggressive selling at a key area or at a key level. So we're going to start with demand zones, and here we have a demand zone here. And just so you know, I draw my demand zones around bearish candles, and I draw my supply zones around bullish candles. So we'll go through that more as we go through setups, but you'll see what I'm talking about here. So in this setup here, I have the candle drawn around this bearish candle here, and we see that price aggressively pushes out of the zone. And so what I like to look for when I take supply and demand setups is specifically two things. I like to see a break of structure, and I like to see a gap that's left at the zone. So here we see price pushing out of this demand zone here, and it closes just shy of where this candle actually, the bearish candle actually, at the high point of that bearish candle. But then it pushes up a bit more, and then here we see our first break of structure, which again is one of the things we look for: break of structure and a gap. So we have our break of structure here. Price is breaking above this level. You could also even draw your, we could also put this right here to see that it's going right above this key level here. So price breaks above it with this second candle here, and then it left a gap. And what a gap is essentially the candle that we're looking at that breaks the zone. When we look at the left and the right of it, we want to see that there's an imbalance there, or that the upper and lower wicks of these two candles don't connect, and that is what a gap is. It's leaving a gap. So I'll show you what I mean by that. So with the bearish candle, the high point is right there, and then with the candle on the other side, its low point is right here. So you see this small little space right here is what's known as a gap, or an imbalance in the market. And I like to see a gap that's left at the zone, and then price will come back in and fill in that gap. So we see here that price pushed up, it came back, and it almost tapped into the zone, but it didn't. And then it went up a little bit more, giving us another break of structure right here with price pushing above it. And then price aggressively came into the zone, filling the gap. So we could close this out here, and now it taps into the zone. And so when price taps into the zone, the way I enter is I take a break of candle entry. So this candle taps into the zone, and then this second candle here pushes out of the zone, and it closes bullish. And so with demand trades, we're taking a break of candle entry. So we'll be taking a break of candle at the top of the candle. So we have our long entry here, and then we put the stop loss right at the bottom of the candle that we're entering off of. And then we initially target a 1-to-1 here, and then we see that our 1-to-1 is hit within a couple candle printouts on this specific trade. And so that's simply how I take my demand trades right there. We have a break of structure with price pushing up, and it's breaking above this swing right here, and then it leaves a gap where that candle high is and where the candle low is on these two candles. It leaves a gap in the market, and then we wait for price to come back in and tap into the zone. And then we take a break of candle entry where we put our stop loss at the bottom of the candle entry, and then we target a 1-to-1, so wherever a 1-to-1 might be. And then on my trades, I also do leave runners. So if you wanted to leave a runner, you could close some contracts out here at the 1-to-1 point, and then you could even leave some more. And if you want to target like a 1-to-2 or 1.5 or a 3, however long you want to leave it running for, that's up to you. But yeah, that's essentially how I would take my trades. And if I left the runner, let it run. So this trade here, we see that price actually pushes up quite nicely. But yeah, let's jump into another one. All right, so here we have another demand setup where we have the two things that we like to look for: a break of structure. We see when price pushed out of this zone here, it broke right above this swing right there. So it's breaking right above that swing. And that's the break of structure that we like to see. That lets us know that we're trading the right way, or we're trading with momentum, or where the trend is going. And then we see here that we also have a gap as well. And the gap, like I said before, is an imbalance in the market. We have on the left side of this candle, we have the bearish candle right there. And then we have, I'll use the same one right here. On the right side of this candle, we have the gap right there. So from this bottom right here to this top right here, there's a gap that needs to be filled. And as price comes back into the zone, it closes the gap. So this first candle that entered into the gap, it closed right there. And then this second candle here actually pushed into the zone and it closes out the gap right there. So we had the gap and we had a break of structure. And once price taps into the zone, we wait for reactions and we see if we get a break of candle. And with a break of candle, we'd be targeting the top of the candle as our entry. So with the first candle that taps in, it gives a nice rejection. That's always nice to see. Love when candles reject out of the zone and not close into it. But this one continued to push down in, and that's okay. And then this candle here, it dipped a bit lower and then it pushed up, and it gives us our break of candle entry right there. So we'd enter right there for buys, and then we'd put our stop loss right below this, right below the swing of this candle. So right there. I'll put this on it. Maybe this is easier to see. So we put our stop loss like right there, and then we target a 1-to-1. But since the stop loss on this is so small, you could probably target easily like a 2-to-1 or a 3-to-1. But I'll start with a 1-to-1 for this one. We have our 1-to-1 right there, which gets hit in about 5 to 10, 15 minutes. And that's essentially your trade there. You could target a 1-to-1, which is what I normally go for, but you could also leave runners, or like I said, because this has a short stop loss, you could target a 2-to-1, or you could even target the top of this swing right here. And if you did target the top of that swing for your exit point, so it gives you a 4.6 RR rate of return on your entry. So that's pretty good. And essentially we did the same thing. We looked for a break of structure. We saw the gap that the demand zone left. We waited for price to come back into the zone. We took a break of candle entry, targeted a 1-to-1, and we left a runner on this one because it's a short stop loss. And yeah, this trade cooked up. So we love to see trades like that give us more than a 1-to-1 rate of return. So let's check out another one. All right, so in this trade here, we have another demand zone here where price aggressively pushed out of the zone, and we see that it broke above this swing right here, giving us a nice break of structure. So it broke above that swing, and then price even continued all the way up to right here. So it broke above like these swings and these levels as well. So we like to see that, especially when price breaks above several different levels. So demand zone here, it pushed above those swings. It left a gap. Of course, we want to see a gap that's left. And so as you guys know from what I've been saying, the gap initially starts right here. So looking on the left side of the candle that did the breakout, we have initially right there, and we want to see price come back and tap into the zone. So initially the gap in the market is right there, this middle right here, and then as price comes back into the zone, it fills in the gap, and price filled in the gap. And so after it taps into the zone, it gave a nice little rejection as well, kind of small, but it still rejected the zone after it tapped in, pushed in a little bit lower, and then as I said before, we target a break of candle entry on our supply and demand zone trades. So we wait for price to push up above this point right here, and this is our entry point. So we enter right there, put our stop loss below the entry candle, and then we target a 1-to-1 again. And as we see here, price kind of played around a bit, pushed up, came back down to our entry, then it pushed up again, and then it eventually hit our take profit level here, giving us our 1-to-1, or a little over 1-to-1. But again, you can first target a 1-to-1 as your first take profit level, and then you can also leave runners as well and target the top of the swing if you wanted to, and it does actually eventually take out the top of that swing. And if you wanted to go a little bit higher, you can look left and see what other areas you might want to target on the trade. So if you wanted to take out this level right here, you hold the trade a little longer, and you see that it does take out that level too. But initially, the way I trade, I go for my 1-to-1 first, and I leave runners to target different areas on the chart as well to maximize my rate of return. But there you have it with your demand trades. That's exactly what I like to see when I go for my demand zone trades. And now let's look at some supply trades. So with supply zone trades, it's essentially aggressive selling from an area, but it has the same criteria where I like to see a break of structure and a gap on the trade. So let's look into it. So this first trade that I have here, I have my zone drawn around a bullish candle. So remember, with my demand zone trades, I draw the zones around bearish candles, but then on my supply zone trades, I draw my zones around bullish candles. So I have the zone drawn around this bullish candle here, and I look for a break of structure. So price aggressively sold out of that area, and we see here that price broke below this swing right here. So let me just mark that up. So right where we see this swing, we see that price aggressively pushed below it, and we like that. We like that break of structure. So that lets us know that we're trading with the trend and going in the right area. So price goes below that swing, and then also we have a gap in the market, and I'll identify the gap as well. I'll continue to do that. So just so it makes sense, if you already got it, you can skip this part, but it'll be quick. So we have the gap initially right there, and then the second gap we have right here. So with the candle that broke out, we have the top of the gap on the left side, and then the right side of price action, we see here that it's right there, and then we wait for price to come back into the zone and fill in that gap. And so as price comes in and it fills in the gap, we see here that it taps into the zone, and at first it does break out, and our break of candle would actually come right here. And also too, I didn't mention this earlier, but if price pushes out of the zone and it invalidates it, then we just forget the setup and we look for something else. So with this candle here that pushed up, it almost invalidated the zone that we drew around this bullish candle here, but since it didn't, the zone is still valid. So as it pushed up here, it gives us our break of candle entry right here. And as we enter, we put our stop loss at the top of the candle, and then we initially target our 1-to-1. And as we see here, price aggressively pushed out and gave us our 1-to-1 in just a couple candles, so just a couple minutes here. And again, we take our profits initially at 1-to-1, and if we want to leave a runner, we can target these lows right here. So where this initial low was, you can hold for that if you like, and you can get 2.4 RR return, rate of return on your trade. So that's really great. So this is our first supply zone trade. Let's check out another one. So here's our next supply zone trade. Very similar to what we saw before. We target the same things. We like to see a break of structure. So we draw our zone around this bullish candle, and then we see here that price aggressively broke below, and it broke below this swing right here. So this right here is our break of structure as price broke below that swing and it closed below it. That's really nice. And even if it didn't close below it and it just wicked below it, that's fine, but we still have a break of structure here. And then we see here that price pushed actually back into the zone on that initial candle. So since it tapped into that zone right there, we would take a break of candle off of this candle here. So it taps back into the zone, and then it leaves a nice rejection, and it closes right there. And then we take our entry whenever price breaks this candle. So it breaks right there. So we have our entry right there. We have our stop loss set at the top of the candle, and then we target again our 1-to-1. Now I will say for this trade, since price is very bearish and it's been dropping and it's given so many points away, like it's dropped so much, I would initially on this trade target just a 1-to-1 and close at a 1-to-1 and not really leave any runners, because you never know, price is going to correct at some point, as we see the correction here, but you still get your 1-to-1 off of this supply zone trade here. So that's our supply zone here for this trade. Let's check out one more. All right, so for our next supply zone trade here, we have the same things we like to see. We like to see a break of structure. So we see here that price aggressively broke below this swing. I'll mark up the swing right here, giving us our break of structure. So price went below that swing and it closed bearish, and then it eventually tapped back into the zone. And once it tapped into the zone, we would take our break of candle entry. So once it taps into the zone, we take our break of candle entry at the bottom of the candle. So right there, we would put our stop loss at the top of the candle, and then we would target our 1-to-1. So this trade is actually really nice because it actually hits TP in the same entry candle. So this is probably less than a 5-minute trade, but we're scalpers. We're not in the market long anyways. But see, we have our 1-to-1 here. We can even actually hold this probably for a 2-to-1 here, as you see here. And then if you wanted to hold it a little longer, you could, but you can easily get a 2-to-1 off of this trade right here. And again, it's the same exact thing. We look for a trade that has a break of structure and that has a gap as well. And then once price taps into that zone, you take a breaker candle entry, the bottom when it's for a supply, or at the top when it's for a demand, and you target your 1-to-1. And if you choose to leave a runner after that, then you can do that. So I hope you guys enjoyed this video. I hope that it brought some value to you. If you have any questions, definitely leave it down below and I'll get right back to you as soon as I can. But these are trades that I take on a daily basis, and these trades have made me a profitable trader. So I wanted to share that value with you guys. And if you have any questions, again, leave it down below. Otherwise, I look forward to talking to you guys in the next one.